Hello, my friends. Brett Patterson coming at you from the financial capital of the West, the land bountiful, where milk and honey is in abundance. It is May 26th, 2026 of the year of our Lord, the day after Memorial Day. Great to have you. We got Mike, we got Brian, we got Spencer joining from Logan. Gosh, Spencer, great to see your face. It's been a
Hey, appreciate it. Appreciate it. Great to be here.
And I want to point something out. Brian's got a new hairdo going. Looks good.
No, I
I
don't.
thought you were going to point out the American flag behind him. I
Oh,
think
it is a good. Yeah, God bless America. 250th
Oh,
anniversary.
right there.
Right there, Brian. You look great. You look sharp as a tack, too, my friend. Sharp as a tack. It has been a great market, my friends. Let's look at the market. Let's do a market update. Then we're going to talk AI, Nvidia earnings. We're gonna talk about the next market crash, which Spencer has highlighted for us exactly when that's going to happen, and much more. But first off, the market. Okay, the market bottomed on March 30th. The Nasdaq year to date is up 18.3%. The S&P 9.84%. We're on a tear, guys. 9 straight weeks of gains. We're entering the 9th straight week of gains, which has happened a few times in history, but not often. It's been a great the deal with Iran potentially going to happen, although you never know in the environment we find ourselves. But a very, very big bullish run. How long can it go?
Do you want to
Nobody
answer to
knows.
that?
Till it ends.
till it
Good
stops.
answer. Till it stops. Here's the crazy thing that about this current market right now that we find ourselves in is that a lot of people think, hey, it's tech. Tech's up 18.3%. I mean, it's almost double the S&P 500. But you have 6 of the 11 sectors outperforming the S&P 500. So it's a lot more than just tech. Energy's the winner, of course, with Iran. Materials, REITs, industrials, consumer staples, all outperforming the S&P 500. So it's been a great market for a lot of sectors. So are we in a tech bubble? Well, let's talk, Brian. Nvidia came out with earnings, the largest company in the world. What's the market cap on Nvidia? It's
Over,
like
over 5 trillion.
Over
5.5
5,
billion,
yeah.
something like that.
over 5.2, 5.3 trillion, on its way to 10. And how were the earnings? It's important to understand the biggest company in the world. Brian, Mike, what did we learn with Nvidia?
Yeah, Nvidia's earnings were, incredible. One thing that I think stands out for me is that revenue year over year was up 85%. And then as we were talking, which is, for a company that size, growing revenue at 85%, and they're looking for probably about the same kind of growth, similar kind of growth over the next year. But they're just quarter over quarter, we had 20% growth just over 3 months ago, which is, very strong performance. And then, Brett, as we were talking earlier, if you back out China, and so it's kind of an apples to apples comparison, revenue is up over 100%, 105%, I believe. So
That's crazy. And that's because a year ago they were selling to China. Now they're not. So you strip out China for an apples to apples comparison, you're over 100% year over year. That's crazy.
Amazing.
Okay, it's the last of the hyperscalers or big tech company, the biggest companies in the world to release earnings. Mike, what did you learn? Anything?
That they sell a lot of stuff. They're going to continue to sell a lot of stuff. But what I think is amazing about Nvidia is just their gross margins. I mean, in addition to what we're talking about here, you sell all these things, right, or all these products and services, and still maintain gross margin of like 74%. What does that tell you about the quality of that organization that Jensen has put together, right?
Yep.
That is a well a well-oiled machine is the way I look at it. And hey, Brad, we talked about this earlier. They're also treating investors very well, right? They raised their dividend 25 cents.
Yep.
And they're buying back stock, right? They've increased their buyback program. I think it's 80 billion, which
80 billion.
compared to a company that large, is it significant? They're doing something, right?
Yep.
They're trying to reward investors. So
Take note.
it's all good. Looks good.
Mr. Buffett, take note, right, Spencer? Treat shareholders well. I like it. So here's the thing, though. You've got the biggest companies in the world. You've got Nvidia, you've got Google, you got the Amazon of the world. Nvidia, right after they report these gangbuster numbers, what does the stock do?
Drop a little.
Falls, right?
Yeah.
Now it had to run
Pretty
up
typical, though.
but it's typical.
Yeah.
Okay, I'm switching gears on you guys. But Spencer, you text something to me the other day that was Amazon versus SpaceX. We did a whole podcast on SpaceX earnings coming out. And what was it that you sent in relation to revenue, PEs? What's the comparison with SpaceX and Amazon?
Yeah, it was just something that I'd seen and read. Amazon's a little north of most recent year, a little over 700 billion in revenues, in over the last 12 months ish. And they're valued at about $2.8 trillion right now, is I believe their market cap. SpaceX, with them planning on going public, I think June 12th, is that right? Is that the date it's going to be?
Yeah.
They're looking at based on everything that I've read and seen, they're looking at about a $2 trillion valuation, and their revenues most recently were around 18 billion.
Okay.
So you've got companies that are valued, $800 billion is a big range, but you're talking about a company like Amazon, $2.8 trillion market cap with over $700 billion of revenues. And SpaceX is in that same ballpark in terms of market cap at 2 trillion, and they've got 18 billion in revenue. So that's a little bit of a stretch. Brett or Brian, didn't you say it's like a 96 times sales or something valuation?
Yeah, 93, 96
93,
times
something like
sales,
that. But
yeah.
it just shows you valuation matters. And here's something that I still have to talk to clients about. They look at stock price as like, okay, it's $100, and then the stock price of something else is $40. Or they're like, oh, that's a lot cheaper. Market cap is what matters, right? Market cap is the price of the stock multiplied by the number of shares outstanding. That's the total value of the company. It doesn't matter if a share is trading for $1 million, but if there's only 10 shares listed, then it's a $10 million company versus $10 and there's 10,000 or 100,000 shares, available type of thing. So that's the big thing. So in other words, SpaceX is incredibly expensive by all metrics.
Yeah,
Yes.
you look at Berkshire's Class A shares. They're $726,000 per share. So, and that doesn't mean it's expensive. I mean, yes, it's a high price for one share, but that's a good point. Yeah, I think sometimes our investors get confused with that.
So people right now, $700 billion in revenue versus 18, Amazon to SpaceX. People they just want, like, what is it? Because I think some of these big companies, Nvidia just reported earnings, exceeded expectations. Stock doesn't do anything, right? I feel like it's an underappreciated company, although it's the largest company in the world. And Amazon's underappreciated, right? But then you get these shiny new toys, I call them, which is the SpaceX, which are some of these energy companies that are going just gangbuster right now. Versus these, now it could be the law of large numbers as well. Maybe everybody already owns Nvidia, but what's
law of large numbers, but also in a lot of people's minds, it's, hey, a chance to buy into SpaceX at the IPO is, I'm not saying this is equivalent, but in their minds, oh, it's going to be like buying Amazon or Nvidia at their IPO. But obviously there was a very different valuation. So most people I think that I've spoken to are thinking upside, right? These companies IPO'd and they're up 18,000% since the IPO. You know, I'm making up a thing. And so they're thinking 18,000, but what they're missing is, well, it's already starting. I mean, this is me being sarcastic. It's already starting on third base, right? That's when they're IPOing from a valuation standpoint.
Yeah.
But I could be wrong.
I don't know.
Amazon, when they started 20, 25 years ago, or IPO'd, or a Google or a Meta, I mean, they were much smaller companies than a SpaceX today. SpaceX stayed in the private market for a long, long time and has grown. And really, if we kind of dig into the SpaceX IPO, definitely the most valuable part of that business is their Starlink. I mean, Starlink's actually a really good business, and
It's where the revenue's coming from.
yeah, that's where that's where the only profitable division in SpaceX is Starlink right now. So,
Yeah.
but I think the rocket company SpaceX, I think that's going to be an interesting business. And the big loser right now that's gushing, that's spending a lot of cash, is their their business, their data centers, their
Yep.
Grok and all that. That's not making money, and
When
kind of eating up.
When Nvidia IPO'd in 99, 300 million market cap, 300 million, not billion, million, right?
Yeah.
When Amazon IPO'd in 97, it was like 420 million ish. So we're talking, I mean, what is that multiple? Let me do that math really quickly.
I think, Brian, you make a great point. Companies are staying private longer.
They are.
A lot longer. Their ability to raise money in the private markets is a lot greater than it was back in where really any time in history. And so That's a great point. So the market cap is going to be worth more just from that alone. But when you look at Nvidia, when you look at the best, biggest companies in the world, the best time to buy them is when they're underappreciated. And that's not a recommendation to go out and buy anything, by the way. But I guess here's the question: as we think SpaceX versus Amazon, right? Similar market cap, only $670 billion difference in revenue. How important is price? Like, do we ignore price with the SpaceX IPO? Like, how important is price?
I think it's incredibly important. I think you can have two wonderful businesses, but if you pay too much for even a wonderful business, it can turn out to be a poor investment or a mediocre investment. And so I think the price you pay, it makes the difference. It really can make the difference in your investment returns, or whether or not you have a good experience or a good investment returns. Price is a very important part of that.
Very important. Great investment to an average investment because you pay too much for it. Yep.
Yeah.
Spencer, did you get that math done?
Yeah, it's about 6,666 times what Nvidia IPO'd at in terms of valuation wise.
Well, just that number in and of itself.
So pretty much 67. Let's round up, or 6,700 times what Nvidia is valued at.
That's amazing. Time. That's amazing. The FOMO trade. People like new shiny objects. They just do, and they like to tell their friends that they own them. But it's dangerous.
I'm bullish on SpaceX as far as the company. Now, the stock price I'm not so bullish on, but as far as the company, the underlying businesses, I think there's a lot of really interesting things. I think their space business is incredible, has a durable competitive moat. I think their Starlink business is a good business, and I think there's a lot of potential with X too. So
I'm with you. Yeah.
I also think that there's just an Elon Musk premium
for sure.
Just because of track record, right? I mean, Elon has a phenomenal track record, and so there's a premium there that look, I want to get in on anything that Elon's a part of because of what he's done at other places.
Yeah.
And Tesla has a premium. So yeah, there's definitely a Elon premium, even though there's a lot of people out there that don't like Elon.
Yeah.
But I was talking to some people over the weekend who just bought a brand new Tesla and they love it and they have FSD and they're driving. They don't like Elon, but they love their Tesla.
Well, yeah, and I'll be honest with you, most people like to make money.
Yeah.
And I think Elon's made a lot of people money. Now he's made a lot of people mad politically or whatever type of
Right.
stuff. That's not what this podcast is about, but he's made a lot of people a lot of money, and typically people want to jump on that bandwagon.
So let me wrap this up then. Don't ignore the best companies in the world that have incredible earnings, but are mature businesses, because you can still, if you buy them at the right price, you can still make great returns over time. Be careful of the shiny new object. And here's what excites me the most, Mike, that we can do for clients, right? SpaceX comes out. How long do you think before they have options trading on them? Like I would think
it'll probably be pretty quick. There will be a lot of unique things associated with this, the way this trades in the secondary market. My understanding is that insiders, people who are part of the private shares, they're going to roll them out, allow them to sell in a slightly different process. I mean, what I'm trying to say is there are unique things that will be associated with this.
Yep.
So it'll be interesting. Probably not too long though before we see those options. Why? What are you suggesting here, Brett?
Here's what I'm saying. Clients with $1 million taxable account and higher, right, can still benefit from SpaceX in creating income through the options market.
So selling put
without owning the shares. There's two opportunities. So that's what I'm excited about.
Yeah.
It's not a recommendation, folks.
It's probably going to be awfully liquid. There's going to be some volatility to it.
Oh, it's going to be fun.
Those two things are kind of nice for an option trader. So it'll be fun to watch.
Amen, brother.
There's so many people out there who own shares in the private market, right? They're gonna want to sell, man.
Yeah, but
how many billionaires are going to get created in 15 minutes, right?
Okay,
just from SpaceX going public.
Do you think if they're locked up for 6 months, right, and they'll gradually,
right?
Maybe 3 months. Do you think they're going to want to collar their positions in any way?
That's true. Yeah.
To reduce risk.
Yeah.
Right. They're going to be using options themselves, which will create liquidity and better pricing.
Which in turn requires stock activity to hedge the option trading. Yeah.
Oh, it's going to be a great day.
Layers.
Yeah. Look out, folks. We lost Brian and Spencer nerding out in the options. All right. This is a couple things that I've seen headlines that clients have asked about, right? AI tech bubble. The fear that we're in a bubble. Okay. And so we did some research. And the fear of we're in a bubble is because you get a SpaceX with $18 billion of revenue, almost 100 times sales. Like that's crazy. So, Brian, in 1999, the NASDAQ 100, which is a true tech bubble, the NASDAQ 100 was trading for 70 times forward earnings. Today, we're just under 30, right? What's the difference between now, tech bubble, versus 1999?
Yeah, the big difference for me, back then, internet companies didn't really have any revenue and let alone profits to back up some of the valuations that were happening back in 99, 2000. And where today we have companies that have real revenue, real earnings. We've been talking about Nvidia, but we can talk about Microsoft, Google, Amazon, Apple. All these companies are some of the best companies in the world. They have very, very large amounts of revenue, hundreds, in the case of some of them, over $100 billion, or actually, I think Google's more like $400 billion a year in revenue. Amazon, as Spencer just talked about, 749 or 700 plus $billion in annual revenue.
Net profit from Nvidia this quarter was 58.3 billion.
Yeah.
Net profit.
Yeah.
That's crazy.
So for example,
is what you're saying.
Yeah, I mean, you look at Nvidia, it's trading around 24 times forward earnings. Is it cheap? Well, you could argue if for a company that's growing at 80, 90% top line growth at 24 times revenue, that's pretty cheap. If you look at even a year beyond that, it's trading at a sub 20 multiple. Microsoft's trading at 24 times multiple, growing, their top line at 20-ish percent, Google at 27 times, Amazon about 30 times forward. So I wouldn't I wouldn't say they're necessarily cheap. I mean, that the actual number is cheap, but if you take into account their growth rate and their profitability, I think they're, in the range of either slightly undervalued or as a whole, or very fairly valued, right in that range.
So if a client comes in and asks anybody here, or maybe just makes the statement, we're in a tech bubble, how would you answer that? This is going to end badly. We're in a tech bubble. How would you respond?
I don't think we're in a tech bubble. I don't necessarily think that our technology companies are overvalued. I don't think they're necessarily selling at a deep discount. Now, there are some similarities to the late 90s, the dot-com bubble, and today. And there are some businesses out there that there's a lot of speculation. There's a lot of prices are running up. Investors are getting really enthused. And so there are some bubbles out there. But if you're talking about the NASDAQ 100 or the big companies, for the majority of those are selling at pretty rational prices. I would not categorize them as a bubble territory.
Spencer, Tom Szymanski comes up to you. I don't even know who that is. I just made that up. Was that the guy on Monsters Inc.? That little creature on Monsters Inc.? What was his name?
Michael Wazowski.
That's what I was thinking of. Michael Wazowski. Michael Wazowski comes up to you, Spencer, says we're in a tech bubble. It's going to burst. How do you answer Mike Wazowski's question?
I tell them there's probably some individual pockets within the market that are overvalued and probably are in bubble territory. But I think, as Brian mentioned, with good evidence, the entire tech sector is probably not in what I would consider bubble territory. Doesn't mean it can't go down. Doesn't mean there, can't be a correction or something like that. But I think there are earnings that are justifying a certain floor or a certain valuation. So I'd tell him to avoid certain pockets and go watch Monsters Inc. so he knows who he is again.
So is it fair to say there will be winners, there will be losers, and the price you pay for an investment is very, very important?
You can have the best business in the world, and if you overpay, it can be an average investment. And then you can have a really good business, and if you significantly underpay, it can be an incredible investment. So price matters so much, whether it's in any asset class. We're not just talking stocks, we're talking real estate, we're talking about any asset class.
Yep.
For that matter, you can have a poor business, along Spencer's line there, a terrible business, but if you pay the right price for it, it can be a great investment.
Yeah.
Mike, any thoughts for Brother Wazowski?
No, not really additional thoughts. I like what Spencer said. I mean, just there's earnings there, right? These companies are making a lot of money. And the reason you invest in something is because that's what they're doing. You want to participate, you want to own the business. And as long as that's happening, right, then own the best companies is the way I look at it. But there will be losers, like you said, right? There will be a shakeout at some point of certain names. But it's probably not going to be the names that are 85 or 75% profit margin. Their revenues growing 85% year
Yeah.
over year. It's tough to say that those companies are the ones that are at risk right now, anyway. And
Yep.
Brett, I think you and I talked about this last week, but we're in a market, and I guess maybe we're always in this type of environment, but I think there are a lot of excuses out there for people to avoid investing, right? Either A, they're terrified about the macro setup, or they want to be terrified because this is an AI bubble. Or on the other hand, they're overly excited because they've got all this fear of missing out. Like it's a mix of FOMO and terror. It's kind of a weird environment that way, I think. But if you focus on the process and buy good businesses, that's what it's all about. And that's what we keep doing here.
Yeah. I actually love the environment when there's a lot of fear, people are negative, and people are talking about crashes and bubbles and stuff, because that's what the market needs to continue to go higher, right? It's when everybody is excited and euphoric, that's when you have to worry. And let's climb that wall of worry. That's what bull markets do.
There's both of that happening right now. There's terror and there's a wall of worry. I mean, people, when they invest, it's a vote, right? It's their vote and confidence of market environment. And we're at all-time highs. And would you say the NASDAQ's up 16% this year or something
18.
crazy like that? Yeah.
Yeah, it's awesome.
So there's confidence.
Okay, so let's pick up on that and switch, not really switch gears, but talk about this last thing. It's been in the news quite a bit. Andrew Ross Sorkin, New York Times columnist, CNBC contributor / anchor. I don't know. He was on 60 Minutes being interviewed. And the question came to him, when, or not when, will there be another market crash? Was the question. His response, this is what he said. And I want you guys to think how you would answer this question too. If you're on 60 Minutes being asked by, what's her name?
Leslie Stahl. Was it Leslie?
Yeah, I think it was Sister Stahl. Yeah, Leslie Stahl. He said this in response. He said, "We will have a crash. I just can't tell you when, and I can't tell you how deep, but I can assure you, unfortunately, we will have a crash." So he said this, and then all over social media, crash is coming, crash is coming. News outlets, crash is coming from the CNBC guy. All right, so I want to pause there and pose this question before any other. How would you answer that question any differently than Andrew Ross Sorkin did?
No. I mean,
Spencer's a no.
I thought he answered it really well. I tell clients, especially when they're starting out, it's going to go down. It will go down, right? And a crash, we talked about this a little while ago. It's a very relative term, right? If it went down 10% from today, people would feel like it's crashing. I mean, so is it crash 10%? Is it 20%? Is it 30%? A bear market is a 20% decline. So typically the people in our world call a crash a 20% decline. But is it 2007 to 2009 where it's down 57%, or 2029 to 32 down 89%, or just down 20%? So the reality is he was right. It will come. If you're a client, you're 60 years old, guess what? It's going to crash at least 5 or 6 more times before you pass away, at the very least. So,
okay.
Yeah, it will.
Brian, Mike, I'm going to come back to you in a second, Spencer. Would you word that any differently based on what Andrew Ross Sorkin said? Is he correct?
Go ahead, Mike.
Yeah, he's absolutely correct. I don't know why that caused such a ruckus. I hadn't heard about the ruckus, but I've heard him answer that question since he wrote his book, probably 15 times, right? But he just understands, right? It's humans that are in the market. And we go through those cycles. It happens over and over and over again. And what do they say that foresight's 50-50 and hindsight's 20-20? If you use your hindsight 20-20, thinking about every previous crash that we've had, right, or 20% move down, would you have been better off actually taking advantage of the opportunity and buying things when that happened, right?
Yeah.
So he's right. I mean, the market is it's going to happen at some point, right? But
Crash.
one way to look at it is it's an opportunity potentially.
I love it. I love it. And you're right. Yeah, he answered it perfectly. Brian, any thoughts?
Yeah, I don't. I think he answered it. Yeah, perfectly. I probably the only thing I would add is that crashes like 1929 or 2007, 2009 uh, are pretty unusual, and I wouldn't expect that severe of a crash. I mean, you really that's happened twice in a century. Those type of crashes where we're talking 50+% or more. So I wouldn't expect that. But 20%, we know just through being in the market, 20% corrections happen every couple of years. 10% corrections happen every year. 30% corrections probably happen every 5 or 6 years, I would guess, something like that. So you just have to. Charlie Munger talks about having mental models. There you go. I have a mental model in my brain that I know that there's going to be a 20 to 30% correction every 4 or 5 years, 5 or 6 years, who knows. And I just know that's going to happen, and I just mentally prepare for it.
Okay. I'm going to ask you a question here, Spencer. But before I do that, I'm going to bring in the subject we just talked about, which was the price you pay is everything, into this crash scenario. What stocks are sold off first in a crash type market? Meaning this, people own stocks that are 100 times earnings, these high flyers, these shiny objects versus Apple, right? Not that everything will go down, but the speed at which those stocks go down is dramatically different. Have you guys seen that in any market crash that you've experienced, which we've all experienced?
21 was a great example of euphoria. I mean, that was NFTs, right? That was crypto. That was a lot of, I mean, a
Meme
lot of tech
stocks.
stocks. A lot of different stuff. Teladoc, Peloton, whatever it was in 21, and then 22 came, and I mean, Nasdaq as a whole got hit really, really hard, but a lot of that stuff, I mean, was down 70%, 80%, 90%. I mean, NFTs were down 100%, right? No one wanted to buy some
Yep.
picture of a monkey that had been drawn by
That's
a
that's the
4-year-old,
perfect example. I mean,
right?
I brought it. Peloton was almost $100. It's at $5.67 right now. Like the shiny new objects, beware, because when, not if, that market crash comes, those are going to be destroyed. Right? The price you pay is so important in what you own, quality in your portfolio. Spencer, you came into Iron Gate, I want to say July of 2018. It's been a great run with us, brother. Is that right?
Yeah, yeah.
How many crashes? I'm going to define crash. Okay. I'm going to take a stab at it. 20% market downturn. Okay. I'm going to leave speed out because how many market crashes, a 20% decline, have you experienced in 8 years? I think that's 8 years, if my math is right. 8 years at the IGGA. How many?
Bullish Fed, fourth quarter 2018. One, COVID. February to March of 2020. Bear
Okay.
market of 2022. Liberation Day, April 2025.
Oh, great
So
day.
we've had four, we've had four, I would say, significant market moves to the downside. Call it a crash, call it whatever you want, in 8 years. So you just better get used to it. What I will say though, Bretter, this is going backwards for a second. Andrew Ross Sorkin's comments were not alarming, but I liked what you said. People have taken it, and I've seen the headlines right on my Apple News feed. Sorkin predicts a crash, says a
Yeah,
crash is coming. Whatever it
exactly.
is,
Yeah.
it's the jackwagons that honestly, it's just clickbait. And here's what people have to gauge. And as I've worked with more and more people, there is a temperament. I don't know if it's genetic. I don't know if it's nurture versus nature, but there is a temperament of a certain percentage of the population that is just drawn to doom and gloom. They just are, like, naturally, that's where their brain goes. And that's what, and that percentage of the population feels like it's actually increasing a little bit, maybe. I have no data to support that. But, and so that's what gets people's attention, right? If Andrew Ross Sorkin, the headline says, Andrew Ross Sorkin says that the market will have a correction at some point in time and he doesn't know when. I mean, no one's going to click on that, right? But crash is coming. Crash is imminent. I mean, that's what people, but most of them have no basic knowledge of financial markets in the first place. All they're trying to do is get clicks. And then there's the crazies that have been saying it for, that have been saying it forever and are right, once every 30 years, 50 years, or 60 years. And I mean, we know who those guys are. They're on CNBC every once in a while when it goes down big time, and they come on and they're like, I was right. And you're like, yeah, you missed out on the 200% gain. And now you're right on the 20% decline. So anyway,
So two things I'm going to take away from that, Spencer. Number one, you've been here 8 years. There's been 20% declines every other year, right? I'd also say those have been the best buying opportunities in the last 8 years as well, going to what Mike said. So that's the first thing. The second thing is, I'm going to steal something from you that you just said, and I feel like we need to put a Munger spin on it. And when you said it's those jack wagons, I completely agree with you.
Did you just quote Munger by not quoting Munger, but
I did. I quoted you. Quoted you. We need to add the word moron into that statement, and that'll be a true Mungerism. All right. Love it. Prepare for the crash. It's going to happen. Prepare yourself psychologically, but buy the best businesses in the world at the best prices. Just be disciplined. Okay. Anything else, gents, before we sign off for today?
Sounds good.
God bless America.
Brett. You look good.
Good Memorial Day. You guys look tan. You've been outside. Brian, you got that new flow going. I love it. It looks sharp as a tack. All right, my friends. Until next time. Bye now.
Bye.